Righty, welcome in everybody. Good to see everybody. Hope you have a wonderful day. You know, the great part about our little strategy here is you wake up and I don't know if I can put this into words. You wake up and you really don't care. Hey guys, daddy's in his session. Remember, you got to be quiet. You really don't care what the market is doing. You go because you've got a plan for what to do if it goes up, and you got a plan for what to do if it goes down. And it's really empowering. I think the empowering, I use that word a lot. Empowering because how many times have you during your trading career go, oh God, I got to wake up today and find something to trade. You know, and for those of you that follow Tasty Trade, that would involve you going and searching the high V stocks. Oh, let's see where we can get volatility, where we can sell some premium. And, it's exhausting. It really is exhausting. And unless you've just got plenty of time to commit to that. So what we have done, interestingly enough, we've committed, what is it? The Malcolm Gladwell book, I think that's his name, where you commit the 10,000 hours. Was it Malcolm Gladwell that come up with the 10,000 hours? Before you actually are competent at something, you got to put in the time. So, it's kind of amazing that I had a finance and economics background with my undergraduate work and never really traded stocks, never really traded options at all. I just had my retirement accounts and, put them in mutual funds and the like. You go, well, do you know if you're doing it right or not? You just don't. You just kind of go, well, put it in this, put it in that. So for my entire career, I was 100% invested in the S&P 500. And, everybody's like, boy, that's risky. And I'm like, well, yeah, but, that's where growth is. That's all I did, S&P 500, S&P 500. And I didn't worry about the thrift savings plan S funds or G funds and all that. I just put it in the C fund, stock market. Then in 2012, as I was installing Roku hold a minute, I'm about to beat some ass. Guys, you remember when Daddy got the switch in the car the other day? I'm about to get it again. No. Okay, Daddy is in a session. This is very rude. So, what was I saying? I was installing my Roku box on my television. And by the way, my kids broke like 2 or 3 55-inch TVs during the time. They would throw a rock or baseball. And I was like, I finally got something to put over it where they wouldn't break it. And then on my current TV, they didn't break my TV yet. They broke the protector of the TV. So the protector is messed up. But nonetheless, we have a thing where you don't have to wake up and go, oh my God, I got to trade this or that or this. Yeah, it's just cool. It's refreshing to wake up and not have to worry about what you're going to trade. I think that's the key that I wanted to get to you. I mean, you kind of know the plan, right? There's nothing that takes us by surprise. What if we have a 10% drop in the day or a 5% drop in the day? Well, we know what to do, don't we? So that's what I like. It's just kind of a hands-off, it's Christmas, week of Christmas. I don't really put a lot of stock into anything. I don't know why this is messing up over here. This is disturbing to me. It's really, just kind of a cool little plant. And when I first discovered Tasty Trade, oh, that's what I'm saying. I put Roku on my TV and discovered Tasty Trade. And it was great, right? You're like, oh man, this is cool. There's these 2 clowns out there teaching us how to trade. And I was so excited. I can remember I was at a ball game. I was talking to somebody. I was like, man, I never even thought about options. We covered them one day in our finance class or investment classes. And then, oh, this is the greatest thing. The probabilities before you trade. So the next thing you think, oh man, we're going to kill it. But then we don't kill it. And I tried the Tasty Trade way for years and years and years. And I just couldn't make heads or sense of it. So, like most of you do, we branch off to other things and, we outgrow tasty trade, so to speak. I don't want to say outgrow them. I still love watching the market mixture segments, and I still love Tom and Tony, and I like watching them all that. But we grow and we do other trades and other things that other people have done. And so finally, you may be at a point you go, man, I've kind of outgrown Bobby here. Bobby took me up to this level. Now I need to find something else. But then ask yourself, do I really need to find something else? Do you really? Because that's what we always do. We have the shiny object syndrome, especially this time of Christmas. I was watching Rudolph the Red-Nosed Reindeer at the Puppetry Arts place of the day, and I remember, silver and gold, silver and gold. We're always chasing. We're just always chasing. So at some point, you just got to go with your plan, get your plan together, whatever your plan is, and just go with it. Now, I love these people that says, well, no strategy will work in all markets. Well, that's why you got to create a strategy that tells you what to do in this kind of condition, and then your strategy tells you what to do in this kind of condition, so you can adjust. We always want to adjust, but we don't want to search for new and flashier trades. That's the thing that'll kill you, and that's the thing that'll get you out of it. I want you to think about when we all started. So today's our 1-year anniversary, according to Ken. So, and he wrote that wonderful, nice piece, just so incredible. I gotta let Beth read that. It's so good. I'll show it to Beth, and I'll go, Beth, why don't you write good things about me? You never share anything nice about me. Look what Ken wrote. It's very nice. And then she'll roll her eyes at me and say, get over yourself, Bobby. So, what was I saying? Oh, so we've been here a year. I want you to think about all the people that have come into our group. I think we've got over 200 now. And there are maybe 7 or 8 of you that come in, on a regular basis. I know people are busy and they got all kinds of things, but they're just not happy with what they're doing in trading. So at some point, you got to wake up and go, okay, this is the strategy. This is why we're doing it, and be committed to it and not looking for the next thing. Now, I'm one to be talking because we did a lot of things over this last year. I traded individual stocks just to impress y'all, and we saw how that turned out. That was terrible. So my overall strategy is, why look for the needle in the haystack when you can trade the haystack? And that's what I do to this day, trade the haystack. That's what we want, the haystack. And we think about all the people that have come in. I woke up at 9:20, dressed, greeted the missus, cooked breakfast, turned on the CPU, and greeted the market. That is awesome. One day you will meet yourself, and then you will find your last market mentor. Oh, how cool is that? Kids got all these good little sayings and stuff. So, it's just, you can chase. You can chase. You can go to Theo Trade. They got great stuff. Theo Trade's great. Got great stuff. We've got some stuff from Theo Trade that we do, right? But I've already been there. I've already been to all the places that y'all are thinking about going. I've already been there. I've already got the stuff. And that's fine. Increase your education, right? Get education, get everything, but don't all of a sudden keep thinking that we can reinvent the wheel. Let's just do what we do. Let's see how we turn out. If this doesn't work out, then I own a Facebook group called the Fat Angry Artist. And I'm too lazy to draw and to do art, but one day I'm going to. And I've had this for years. And my thing is, I want to paint while I'm listening to music and record the video of me painting whatever I paint. Now, have I ever painted before in my life? Oh, heck no. But one day I'm going to do it. So if this trading gig didn't work out for us, we'll do something else. We'll go into art or something. Something that makes us happy. Kind of sad. I read these comments. Y'all know I'm always in that anti-work Reddit group because they fascinate me. And you're reading people out there. You got a 23-year-old goes, hey man, here's what I'm doing. Here's my life plan. My life plan is to borrow as much money on credit cards and loans and student loans, and get as much money as I can to enjoy my life. He said, I don't have any intentions of paying these loans back. What I'm going to do is I'm going to get all this money I'm going to enjoy all the money from the credit card so long as I get everything that I can. He said, then I'm going to kill myself. That's their take on life. I'm like, what can you imagine? Just how terrible of an outlook to wake up and go, man, that's what I'm going to do. Just horrible. So what we do is we wake up and we have a strategy. It's not a trade. So it's not a trade that we're saying, hey, let's do this trade and let's add this trade to it. Let's do this. The whole thing is a strategy. Now, the cool thing is we don't know if it works. We think it works. We've got a lot of good minds in here working on it, but we don't know if this thing works. We think it's going to work. But the cool thing is I have bought in. I don't know where y'all at. I have bought in. I have bought into the idea that, hey, I don't have to worry about chasing strategies anymore. I'm done. I'm finished. I don't want to add anything else. I've got it. Doesn't mean I don't want to learn. Doesn't mean I don't want to tweak here and there. But as far as just overall stuff, let's go. We've got enough white papers we've read back tests, we've read books, we've done everything. So we are where we are today. All right. So with that being said, our AD is 241. 241. And let's see what that looks like here. 241, and our AD is, wow, this thing's messing up. It just kills me. Oh. Kill me. Here we go. There we go. Show my, where's my stuff at? Stupid chart. I don't even give a crap. Who gives a crap what the chart's doing? Let's just say this. It's up 0.66% on the E-minis, and we're up 0.78% on NASDAQ. All right, so we're finally getting a little bit of a Santa Claus rally. All right, that's good. That's good, Bob. All right, so now we're going to go and look at our volume profile because it does add context to what we do. So we'll go here, we'll look at the ES. Let's see what this thing's doing. We expected it to go up, right? How did we know that it would go up? Well, we didn't know, in fact. Oh my gosh, it went up more than I thought. Look at this. Well, this thing looks different than it did yesterday, didn't it? We got a new point of control. We were, I guess, in here somewhere. So now we're overbought, but now we're oversold with a little bit of resistance here. You know, could we fill in these little places here? Yeah, and go back to this point of control. Yes, but here's what I would expect. I would expect, see how close this is to overtaking where the volume is here? I would expect, since we're oversold, what am I thinking, Bob? I'll tell you what I'm thinking. Let me draw an arrow. An arrow. Here's what I'm thinking. Here's what I'm thinking. I think we're going to go there. And if we go there, we'll probably go there. How's that for an end of the year discussion? We're oversold. What do I think? I think we're probably going to go here. We're probably going to go here to the 50% range. I have no idea, but let's see if that works out. So that's kind of a bullish chart for me. Bullish, bullish, bullish. We're oversold. We would expect a move back into this area. See, it's been a point of contention before. It's been a point of contention before. And I expect, based on the volume that is traded here, that we will come back to this area and most likely there. But as always, if we don't go here, we're going to go here. All right, so let's see what the NQ looks like. Oh man, I love it. If the market doesn't go up, we're going to go down. All right, it's kind of easy to know. All right. Dang it! Damn it! Let's go to NASDAQ. See what kind of story we get from here. God, we'll be redrawing these things in just a couple of days. All right. Well, what do we have on NASDAQ? NASDAQ was oversold. What did it do? It did what we would expect it to do. It would, from an oversold position, it would come back into the fair value range. What do we expect? Maybe some tickling of this area down in here, right? Before it then does what? We think that this will then go and do this and this. Ta-da. Interestingly enough, it's been a point of contention here and a point of contention here and through here. So we expect it to be going back into that area and to test it. All right, so now we've got our little hypothesis. Everything looks kind of rosy and bullish. All right, so then we go and we check out our, damn it. We go back and check our skew driver. Skew driver. Screwdriver is at 52. Let's see. What are they screaming? What are they screaming about? Them kids get my nerves. I didn't want kids. It was bad. All bad. Well, I'll be darned, y'all. Shooting fish in a barrel. So 53 right at 1222 in the year of our Lord. Did y'all watch Joe Biden yesterday during that press conference? I didn't watch it. I listened to it on the radio, unfortunately. Dude was hacking and coughing during the entire thing. I'm like, my God, you here telling me to get vaccinated, which I am. I even got a booster. But you are hacking and, I mean, dude don't sound good. So what we've seen before is when, I'm using my little air a lot today. When the skew gets up here to 96, screwdriver gets 96, we expect a reversion back down to the mean. That is what we call shooting a fish in a bucket. So when it gets back up there again, guess what that means? The market's going to go back up, and it did. That is called shooting fish in a bucket. And then here on the day of 99, that'd been the day you should have sold some puts. Shooting fish in a bucket. Everybody understand how good that works? Now, we don't know the time, but if you're selling something 45, 60 days out, it'll be fine, right? We expect this to eventually go to some sense of normalcy. And we would expect that this 52 at some point would get back into this 25 and 35. We just don't know when. So this even is bullish. Everybody understand how to do the screwdriver. Now, Ken uses a screwdriver a little different than me. He's doing some testing and some things behind the scenes, which we cannot wait to see. Very excited about it. But for the most part, this tells me extremes. At extremes, I know that this gives me a good indication the market's going to go up. If the screwdriver was down, I love using my little thing. Y'all remember I paid $25 for this. That's why I use it. If the screwdriver gets down to the end of this area, right, then what does this tell us? If this screwdriver line gets down into here, then that tells me that the market is going to go kapooey. The market's going to go down and the skew will increase. As skew in this screwdriver increases, the market would drop. So you get a few of these fish in the bucket times, right? At extremes. Market extremes, market extreme, 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 normally tells us there'll be a reversion, not a revision, a reversion to the mean. If we got down here, which we have not, then we would expect a reversion to the mean here. So what is this? This is kind of still bullish, right? Still kind of bullish, even though we're back kind of where we were there. It's still kind of bullish. Doesn't mean it can't go back up here before it goes down here. God, I love those arrows. So that's screwdriver. So let's tell screwdriver goodbye. I remember when you used to watch Mr. Rogers' Neighborhood, and he'd, he'd put trolley up or he'd put something in the closet, and he'd be like, "Oh man, go feed the fish, dude." All right, so we got everything we got down. So now let's check out and see what our hedge looks like. So we go to the Analyze tab. We go to the ES. Shut up, Sadie. Come here, Sadie. Come here, baby. What you screaming about? Mama leave you locked in here with Daddy? Come here. Come here, baby. All right, so we go to hide simulations. We go to our single symbol. And 4 vol steps, 15% up. See what we would be up at about 20% move. We'd be up $92,000. Hooray. All right, so what about with our entire portfolio? Well, we'd be up maybe with a sudden drop, maybe $9,500. Okay, so we know we're not going to blow out. The purpose of a hedge with our system is not to make lottery returns, though you can on a drop, is to make sure that you're still in business to trade the next day. Being up $10,000 would allow me to stay in business. All right, so then we go to the monitor tab and we look at the forest. Looking at the forest. How's the forest looks? We're up $750 on the day. Up $4,800 on all of our open stuff. We're up $9,300 on the year for all the stuff that we're now trading. And our Vega is very manageable. Our theta is negative. Oh, behave. Our delta is 170. Our TQ deltas are 251. Again, we'd like these to be, similar to that while still having the benefit of the hedges. All righty. So what's the plan? Well, we need to also look at VIX. Let's see what VIX is doing today. VIX should be down, right? You would think market up, everything's up, VIX should be down, and indeed it is. So we're kind of getting close to where we think we need to put on our little hedge of our 120-day hedge. I said of our 120-day hedge, our 120-day hedge, right, at 118 days. Well, that's okay, but I'm going to wait. I think we're going to have a Santa Claus rally. Everything that I saw today is a little bit bullish. So I'd kind of like this VIX to come back to this little central area here. Let's see if we can find it. Let's get VIX back into this area, right? Into all this area right here. Maybe should have lowered that a little bit. Let's get VIX maybe about, 18 or 17 before we put on our next VIX hedge. And right now, I really don't need it. I don't necessarily have to have it. So it's overkill at this point. All right, so that looks at the VIX. VIX at 19.65. All right, so we know what to do. We've got negative 87 Vega here, very manageable. We got positive theta here, and we've got positive deltas. All right, y'all know the drill. So if you got a smaller account than I got, then you can do this once a week. If you got, $35, $45, $55 account, you can do this every day. I kind of like doing it every day. So what are we going to do? Well, we're going to do a 1-1-1 trade. And I like, normally we were doing 40 days. I always drift to 60. I don't know what it is. So I'll go with 58 days. Go long put vertical, 50 points wide. There she goes. There she goes. Look at there where we sold those yesterday. We put that one on yesterday, y'all. Look, this is good. Let's see how far down the way from that is. So we'll go down in stripes till we get that down to about $10. We won't pay $10 for that. $10. There's $12. And normally we found if you can get it about $9.75, that's where you're going to buy, because up to 10 to get filled. All right, is that 50 points wide? Yes, it is. Go, Bob, go. Ta-da! Now we got to pay for that book. So let's go sell something. Yeah, for about $20. All right. So let's sell. Let's take in 20.75. Like Ken says, cover our transaction costs. So we'll sell that. So now my delta should be 174, negative 99. My beta went up a little bit, and my theta went from 5 to 8. It's exactly what we want to happen. All right. So let's move this, show our activity, show our two trades here. Now, again, if that's too much risk for you, then you can do what? You can take off risk. So I've still got plenty of buying power. I'm fine with my risk. But if I needed to, if I could make that trade today and I needed to release buying power, then what you go down is you go down and find your lowest naked put. And you say, okay, I remember I sold this thing for $20. Now I can close that for 90 cents. You greedy bastard, you. Why would you not close it, right? Well, I want the positive theta of that trade. Well, why would you not close it, Bob, at 90 cents? Well, dog it, I kind of like that I got the positive delta there, and I want my delta to approximate my deltas of my TQs, or there's no reason to hold TQs. And I got plenty of buying power. I'm gonna catch me out, baby. I'm gonna milk this puppy. It's only got a 1% chance of it getting down, the market getting down here. I've only got 9 days on it. Ride, baby, ride. Capitalist pig, you. Take the 90 cents and let it expire, perhaps. So now if my buying power was gone, or I needed, if I had plenty of theta over here, and remember, I just want my theta to be positive. I don't need it to be hundreds and hundreds of thetas. I just want it to not be negative. I don't want my theta to be a draw on my account as things are progressing. So everything's kind of good here. I don't see a reason to take that off. No reason to close that. But you need to know it's part of our plan. It's part of our plan to close that if you want to. And as long as you close that at 50% profit, you've got the put debit spread that you put on way up here absolutely free. And here's the little thing we like going to. If this is your first time today, look at this. Here's our little hedge. Ain't it pretty? See what it looks like. It looks like a whale. There she is. Hey, baby. Hey, little darling. Look at this fortress that you and I have built up with these put debit spreads. Check it out. We got all these put debit spreads that we've got here that cause us to have a whale. We got a whale. It looks like this. See our little whale? There he is, and his little flipper. Little water coming out here. So we got a little whale. He's happy. And it's a little hedge, right? It's just a little hedge to the downside that doesn't hurt us to the upside. Isn't that great? Oh, I love that. I need to draw more off. It just makes me happy. All right. So we got our little whale. Let's make it big where it looks good. Big. There. Look at that. Huh? That look good? Money to the downside. All right. So let's go back to the activity tab. I'll pull this over to screen right, which y'all cannot see. And then I'm going to put that same trade over here. But do we have the buying power to put it on over here? That's always the question of discount. I don't know why this one's taking more buying power than the other. We have similar trades. So let's go do our trade. Trade, baby, trade. All right, here we are on the micros, Maestro, 58 days. And we did the 45 tier. 45 tier. I went to Target yesterday. I was the only man in the store. Beth gave me her credit card. She's got a Target card. She is. And I had the card in there, and I was trying to talk to these ladies to say, hey, can y'all help me find something? And they were like, oh, that don't look right. It's only 40 wide. 45, 50. No, that's 50. A little debit of 1150. Make sure I did the right stripes. 4510, 4460. 4510, 4460. 60. There we go. There's 10. So I think the woman thought I was stalking her, and I'm like, I'm trying to find X, Y, and Z. And then I ended up going to Walmart, and guess what? She was there. And I said, woman, are you following me? She just kept on going. People don't know how to take me sometimes. All right, so let's sell one here. Where do you want to sell it at, Bob? I kind of want to go to 21. Why? Because I got a negative theta over here. Let's go back. I got negative theta, baby. I need to increase my theta, so I'm going to go a little closer to the money over here. Let's do that. Let's go for $22. Oh, Bobby. There you go. Get you a $12.50 credit. $12.50. Do I have enough buying power? Overnight futures buying power effect will be negative $544. You pig here. What do you do, Bob? I mean, close the account. My God, man. What we do then? Why don't you and I put in the order, and then it's going to give that horrible little noise that says it's rejected. Right, let's do it. What's this? Listen to this horrible noise. Do it. Not rejecting me. Working orders. I thought it would reject me. I don't say 12.50. Let's go up to 12 and a quarter. 12 and a quarter. Going once, going twice. Now my buying power only be negative 125. Let's see if it reject me. No, it's going to let me do it. All right. Well, I'll take it then. Now, and you know what the solution is, right? If you run out of buying power, we just talked about it. You go, got to close something. So you go to 9 days. You go, but I don't have to do it now, right? I'm fine. Unless I get a margin call. And my friends at Thinkorswim call me and say, "Excuse me, Tubby, do you know what you're doing, pal?" No, I have no idea. All right, so we sold this for 2025. If you sell something for 2025 and you buy it back for $1.10, you make like $18.90 or something. Right? I mean, that's a big old gain. So if we had to release buying power, we could do that. And I've got two of those. So you could try, you don't have to close two of them. You close one of them, close one of them late. I mean, we got options, y'all. We got options. We're options trained. Let's go here. Oh man, I'm gonna have to do this to crap me. So now let's go and look at our groupies. Sadie, come here, baby. Is everybody left you? So where we at? We're at 46, 47. Today's gonna be the 48th, isn't it? Unallocated, be those three there. Add them to a group, move to group. And my darn thing is gone. I'm so excited about Christmas. Oh, so let me tell you something. Hey, Beth, are you in here? Beth. So we got Best Diamond, her engagement ring and her anniversary ring and her wedding ring and everything. Got it fixed, like one of the prongs was coming off, so I got them all clean and redone, like back to where it was initially done, So for all those rings, it cost like $400 something just to have them fixed. So I go to the jewelry store where I had it done, and I was like, first of all, y'all better not go out of business before I get these things finished, because it's my diamond ring that I gave Beth like 22 years ago. So we got the prongs fixed and everything. So then listen to this. The owner of the store, I know she's the owner because I've been talking to her, and I bought Beth a necklace there like a month or two ago. So I go, hey, would it be okay if I'm gonna surprise her with this for Christmas? Now, that's not Beth's only thing. I mean, giving her something she's already got. But I said it'd be kind of nice to surprise her at Christmas and give her rings back, right? I said, would you mind wrapping that and putting it in the box? She says, oh, I'm sorry. The only boxes that we have are our boxes. What the hell are you talking about? Your boxes. She's like, our boxes. I'm like, well, that'll be fine. And what she was telling me is she didn't want to use one of her boxes because I didn't buy the jewelry there. I was really, y'all, it's hard for me to get offended, but I was like, so anyway, she must have saw that my look, I looked at her like, what in the hell? I'm spending $400 something, and you won't give me a damn box to put the rings in? Are you kidding me? So anyway, she ended up putting it in something. I don't know what she did, but I just walked over there and I said, I will never go there again. Because I started to say, oh, that's fine. I'll just go across the street and see if that jewelry store has a box. And it'll be different. I just paid her $400 and I just bought something else there like last month. And you're going to say, you're not going to give me one of your flipping little, they're little boxes that open up like that with a little, come on, lady. Greedy old Scrooge. Unbelievable. All right, so then we're add group. You believe that? I'm gonna get me some eggnog today. I've had one bottle of eggnog so far this year. Barber's Dairy. I don't know if y'all have Barber's Dairy where y'all live, but Barber's Dairy gave me a scholarship when I was in college back at Jack State. And it was like a $2,000 scholarship. So ever since then, I try to use Barber Dairy's products to pay them back for giving me a scholarship. And they make the best, but it is so hard to find. They make the best eggnog. So I'm having to get Borden instead. Borden is not quite as good. Look at this, y'all. We're about to fill our 5 in our Black Swan hedge at 265. Yeah, if I'm out of buying power, I get a margin call, and they'll send me a thing, in an email. They won't call me, and they'll say, hey, you're over your whatever, and then I'll go ahead and close stuff. Now remember, too, and Ken found this out too. Remember, these things cost buying power as well, right? Your GTC orders. So it may be that you have to close the GTC order, but don't worry if you got a margin call. If you get a margin call, don't worry about it. They give you a couple days, to take care of everything, and all you gotta do is just close some of your existing positions. So it's nothing really to panic. I get them all the time. I mean, really, I mean, if I go over, it's no big deal. Yeah, I'm a little too stressed out here, you just take care of it. So, yeah.
It's been my experience with in these last few weeks that there is a difference with the night margin. I get into margin trouble at night frequently, and I'm seeing $4,000 swings in my buying power. That's insane. The worst was $8,000. But
Yeah.
at 7 o'clock Eastern, 6 o'clock Central, I guess, they if you're negative, then they'll send out a margin call at TD Ameritrade anyway. But most of the time it corrects itself by 7. So it's if it does cause kittens at 3 a.m., but it does go away.
And Ken, you'll probably agree. The first time that ever happens to you, you'll get like, oh gosh, margin call. But after you've done it a couple times, you kind of understand, all about it, and it's not, in my opinion, it's not a big deal.
It isn't. I didn't know there was such a thing as night margin or overnight margin.
Yeah.
And so, because I'm careful about this, because I've had 2 margin calls, one from Tasty for $25 and one at TD Ameritrade. They didn't tell me how much it was, but it's just like you say, it's nothing to panic about. The first thing you want to do is like you say, shave off some positions. Well, the first thing I do is cancel GTC orders.
Yes.
That's the first thing you do. And then you exit like those little shorts that you have down there in your 111s, the ones that have now made it profitable. Take those off. And it's not hard and it's not scary. But you're right. You're absolutely right. First time you get it, it's Chicken Little and the sky is falling.
Yeah, you're like, what the crap, so that's kind of why it's good here, because if something like that happens, of course you can call your broker and stuff, but put a message into the Discord group, and we'll reach back. Everybody's really good at talking people through things so that we don't have to panic. Check this out. A lot of times on your GTC order, you'll see a buying power effect here on the right. Here it doesn't say that my GTC order has a negative buying power effect, but you can kind of check it out over here at some point. But right now, my buying power, I just looked on my phone, and I got about $1,800 worth of buying power, so I'm fine. We're fine with what we're doing.
That's something else. I discovered it last night. If you're on the platform, it sometimes that buying power you see over there reflects the entire instrument, if it's E-minis or micros or whatever. But on the iPad app for Thinkorswim, it gives a much better margin position than the desktop platform. And I had something I never seen before. In parentheses is a negative number in accounting. I was looking at my micros and I had like $8,000 margin, no, $11,000 margin requirement. And I looked over at the E-minis and I had negative 23 or 2,800. I don't remember. And my margin requirement was the difference between those numbers. So, and I'm beginning, I wonder, is that number they're giving me telling me how much E-mini that I could sell before it touches or changes my margin requirement? I've never seen that before until last night. So that's something to look for. Maybe you see it. And I agree with you. Sometimes the best platform's on your iPad or your iPhone.
Yeah, and I'm glad you brought up the iPad. Beth knows it because she sees all the orders. But look, do y'all follow the Crazy Coupon Lady? It starts with a K. Crazy, Krazy Coupon Lady. Anyway, so day before yesterday, she was posting that you got to go in and out, in and out. They're out of stock, then they're in stock. But Walmart had iPads, 10.2-inch iPad or something. I mean, they're the newer ones too, for $299. So, and I think these, I mean, they're not the latest, greatest. I don't think they're the big ones, but anyway, these were normally like selling at Walmart for $500. So I had them down for $2.99. So I grabbed us two. So I got me one and Beth one. I got one for her Christmas. And here's what Beth goes. She goes, I don't think it's right that you buy yourself the same thing for Christmas that you're buying me. And I'm like, woman, be glad, right? Be glad that you got it. So I cannot wait to see Think or Swim. I've never traded on an iPad. So one of my kids just has an iPad, I think. So I'm really excited about that. But anyway, what was I talking about? Oh, yeah. So we're talking about getting bummed out by a margin call, right? And getting scared. Here's what the number one takeaway that I hope that y'all get with what we do is we don't panic. We don't panic. We don't panic. We trade as regimented and scheduled and mechanical as we possibly can. So that if we do go down, the market crashes and we go down, we've got plans for all that. We know what to do. And we look at the Lacello. I think the Lacello AIM has been a game changer because before it's been like, crap, we crashed. Well, we got to wait through it. No, now we have a plan that says, hey, wait a minute. You can pick up additional shares of this income producing asset to build your empire. And you really start looking at it just like the Walmart sale, where the crazy coupon lady comes out and says, hey, they got this on sale at blah, blah, blah. You better hurry. It's in and out. It's an opportunity. So now when the markets fall and your count's down, don't worry so much about the P&L. I mean, you don't want to be insolvent, but at the same point, you want to take advantage of the opportunity. So if you've got an algorithm running in the background that tells you, hey, okay, buy, gives you the signal, then buy. So it's kind of cool that we don't panic. We just don't panic. We don't puke positions. We don't panic. We just come in here and we just run the plan. And it's liberating, y'all, to be able to do that. And we started talking about this at the very beginning. You don't have to chase trades. You don't have to chase assets. You don't have to chase Apple stock or Tesla stock. We got all that. You don't have to buy Kathy Wood and her ARK fund and all that kind of stuff. We've got a better fund than the ARK fund. What's our fund? To me, TQQQ is better than the ARK fund. We've got a lot of the same positions that old gal's holding. So it's just there to help us not to puke, not to, dump positions. So here's an interesting thing that we're about to do next week. So at the end of the month, what are we going to do? We are going to rebalance the account. So we're going to do I think we're going to settle on quarterly rebalance. From everything that I've read and the back tests that people have done, blah, blah, blah. If you don't ever want to rebalance, whatever. But I think we need to at least do an annual rebalance. So what I'm thinking about doing is we're going to rebalance. And here's how we're going to rebalance. I'm going to go 70% TQQQ. I'm going to go 20% TMLs, which is our bond fund. And then I'm just going to leave 70, 80, 90. I'm going to leave 10% cash. Now, remember when I started, I was 72% TQQ, 18% TMLs, and 10% cash. But that's crazy, right? Let's just round them off to the nearest 10. So let's do 70, 20, 10. Lacello, in his latest version, was 80, 20. He was 80% stocks, 20% cash. If you read the 3% Trigger and some of these other books that we're doing, they're doing 80-20 as well. I kind of like doing the 70-20 and then keeping us a little bit of cash cushion. The only thing that as I lay in my bed at night and I toss and turn and think about how we can make this better, the only thing that I've thought about is, would it be better to just do 70-30 and do 70-30, do 70% TQQs and 30% TML. Well, Bobby, that doesn't leave you with any cash. Okay, well, that's fine. But look, this is outperformed cash, right? And should, in the event of a crash, should wake up, regardless of the interest rate environment, because should, I say should. So the only other thing that I said is maybe instead of the 10% cash, do 70% this, 30% TML. If we need cash to buy TQQ and we don't have cash to buy it, what do? Then we simply convert shares of TML to go to TQQ. It's the only thing that I'm thinking about. Kim, what do you think about that? Or do you think like leaving the 10% cash there is good? I'd like to hear y'all's thought.
Yeah, I believe that's a good idea because sometimes you need maneuvering room,
Yeah.
and cash is the where we go. But while you were talking about this, I was thinking with the market, the bond fund that you got is not as liquid as the TQs. So I don't know if that would be a trouble if you wanted to bail out of those. There would be a great place for cash. But DQs should be liquid enough for you to move. And the thought occurred to me while you were talking just now. Safest place, PHYS, Fizz. That is a fund that has got gold back. It's a gold fund, but it's backed by gold, physical gold. It's not like GLD where that they have more shares outstanding than gold. So you're buying a proxy for gold, and they physically get the gold and put it into a vault. So that's a very safe place if you're worried about a serious crash to preserve money. Because what happens if what would happen if cash disappeared? So that's an extreme thing. So I was toying with that idea, but I'm a believer in having a little cash on hand, and I'm doing that this year. I'm not doing any of the AIM, but next year I'm going to institute AIM in the IRA totally. I was playing halfway, but I'm going to do it. The ETFs, like you say, the ETF is my basket,
Yeah.
and
Yeah.
it takes the work out of it. But so on January 1st trading day of the year, I'll be looking to make this change. And I'm thinking 5%. Okay, because all it is just a little extra room to maneuver. Because it's just you got a pretty good cash. Like you say, your proxy is better than cash. And unless we have a national disaster, my idea of using gold is not that important. But if you think of national,
Bobby, I also mentioned to Ken a while ago a dividend stock, QYLD. You may want to park some money in there. It follows the
QYLD. That's the one. That's
Yeah.
the covered call, right? The like
Yes.
a covered call, and it takes the covered call amount from that and pays it out as a dividend. I think with the money from the covered
it does.
call
It's a
pays-
variable premium dividend, and sometimes they don't have a fixed date for ex-div. It's not fixed, and their plan is they write the call at the market, so it's at the money. So that means their stocks come and go. I think it's a smart thing to do. I was doing that strategy for a while myself, and then when Matt told me about this, I go, "Why should I do all the brain work?" And
it follows the NASDAQ pretty heavily. I mean, it's covered calls on the NASDAQ, so obviously it would.
Yeah.
Well,
and that's a great suggestion. So here's the thing: just because I've got 70, 20, 10 doesn't mean that that's the way that y'all have to set it up. So the cool thing is, right, here's what I would do. So if you want to be more conservative, right, then you could use UPRO here, that gives you 500 stocks. Or say you don't want to use a leverage ETF, then use SPY or the Qs or IWM, whatever you want to use. You choose what your income is. Now, here's another thing too, right? So then you say, well, Bobby, what about this? What about if I want to use several things as my 70% in the AIM program? Okay, we'll go. So you say, I'll do a little bit of TQs. I'll do a little bit of UPRO, maybe ERDI, which is the Russell leverage, and so you could mix your 70% up into several different things. Or say you really like Apple and you want to, I wouldn't do individual stocks, but figure out, you want to do QYLD as part of something here, that's fine. And then say that the 20% that's in bonds, say that you don't want to do a leverage, or say you want to do 10% TMF and you do 10% TLT. Right. So there's always different things that you could put here. And then your cash port, like Ken will say, what was it, PHIS?
Yeah.
Yeah, PHIS. So you could do maybe 5% cash, 5% of that. So you can mix these things up. What I want to do, though, I don't want to make things so complicated that we can't keep up with it. That's what would kill me if y'all go, oh my God, it's so it's so complicated. I can't do all of this because I got to keep up with all this garbage. No, so it's kind of cool that you go, let's just do a 3 account, do your stock, do your bond, do your cash. There's your 3 assets. And make whatever component of each one of those that you want to be to run the AIM. Now, let's say you really want to simplify, then don't even do the options trade. Hell, you don't even have to do the black swan hedge. You ain't got to do the, the daily micros. Let's just say that you just want to, man, you're in a 401k and you can't do it. Then here's what I would do. If I was doing that, I'd do the Hedge Fundy's Excellent Adventure. Y'all have read about that. So if you can't put the hedges on that we have, here's what I do. I do what it recommends. I do 55% UPRO or TQQQ if you're the daring kind like I am. And then I do 45% TMF. That's what I do if I was just because if you couldn't run the black swan hedge or didn't want to run the black swan hedge or didn't want to do the VIX hedge, didn't want to do all that garbage. And you say, Bob, here's what I want to do, Bob. I want to set it up where I just going to rebalance my little thing and I'm going to do it every quarter. Okay. Then do your little 55% into your stocks, do your 45% into your bonds. Rebalance it every quarter. Ta-da! Right? I just don't want y'all to get, oh my God, it's so complicated. I want you to be able to run whatever you're running. I mean, that's what you need to be able to do. Because remember, wealth management is simple. It's just not easy. Building wealth is simple. It's just not easy because most people don't have the discipline to go through everything you need to do to just do it day after day or quarterly after quarter. So do you want to just check on your account once a quarter? Do the Hedge Fundy Excellent Adventure thing. 55% of your stocks, 45% into your bonds, whether it's UPRO, TQs, TMO, what do you do? And just balance it every quarter. You really need to read. I hope y'all are getting on the on your reading list. You need to get that 3% trigger book. It's kind of a simplified Licello. But it's so cool. He's taking 3 different investors through the 2000.com crash. He's taken 3 different investors through the 9/11 attacks. And he's going through and he's kind of seeing how 3 different investors doing 3 different things, how they would end up. And it's kind of funny, one of the investors is like, oh my gosh, they're saying on the news that, the stock market's dead. It'll never come back. We're thinking 2001, 2002, and we know what's happened since then. But it's kind of funny to see how this particular investor was influenced by what we call news. And remember what we call news. News is noise. So, if you want to really make this simple, do 55-45 and do the quarterly rebalancing. Da-da, and don't worry about the news. Don't worry about it. Because you'll be, by rebalancing, that means if your account is all of a sudden 80% UPRO, you got to sell UPRO. That means UPRO went up. So you're, taking the money out and putting it into TQ. Putting it into TMF. It's the coolest thing, right? You can make this as complicated, or you want daily monitoring, you want weekly monitoring, every 2 weeks, every month, every quarter. What do you want? I want this to be able for y'all. This is for y'all to come up with something that you can do. I really want, it shouldn't be as stressful to you. You wake up and the market's down 7% and you go, oh my gosh, that means TQs are down 21% today. Are you panicking? So you look and you're down a few $1,000s on your net lit. Are you panicking? No, because you're saying, wait a minute, people still going to be shopping at Costco. Beth is still going to be spending $16 at Ross. Hey, we're going to have Pepsi for Christmas, even though I'm drinking the anti-white people drink because they don't want their executives to act like white people. And white people, right? So, just make it whatever you do. Stacey, that's terrible. Stacy says, have the prongs on the ring checked every year. Oh, yes, absolutely. And so that was the problem. One of the best prongs came off, and that's why we needed to have it fixed. I learned it the hard way. It was on a trip, got to the airport, and my diamond was gone. I'm still not over it. So I was at the gas station yesterday. I was at the Shell station. Have y'all got your Shell fuel rewards yet? Y'all, I'm telling you, I don't know what's wrong, but I get 30 cents off every gallon. And I've been getting it since August. I'm saving a ton of money. I feel like I'm back in the Trump presidency, the amount I'm paying for gas. I don't know what it is. So y'all need to get y'all one of those. And don't tell them, say, Bobby Gaines has a card. He's getting 30%. And then they'll say, oh, there's air. I don't know what the problem is. I'm getting a lot of money off my gas. What was I talking about? And I found 2 rings on the ground. One was silver and one was gold and had like little diamonds in it. So I went in and I took them to the store and I said, anyone got any rings missing? Now, I think what they're doing is this. People used to do this. My uncle would tell me that they would take hubcaps. Apparently, back during the day, hubcaps were really something that you wanted. And apparently, hubcaps would come off cars. And if they did, people would stop and get the hubcaps because that was a big thing. So do you know what my uncle did? He tied fishing line to hubcaps and he put them in the road. And when people would stop to get the hubcap, he would jerk it out of the road before they got out of their car, and then they'd be looking around for the hubcap. And I thought, dude, you do that now, you get blown away. But anyway, I took those 2 rings in, but then I looked at it and I was like, I think it's like a joke. Like someone left them thinking someone thinks they've got 2 prized rings, right? And I don't think they're prized rings today. Anyway, anyone got questions today? All right. If not, I will see y'all tomorrow. Tomorrow. I love you.